Hello, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily technical analysis on the Indian markets, and where we are going to look at what happened in the market today and how we can plan for a better trade tomorrow. Right? And this analysis for October 7th of expiry 2021, and it was a resistance 1% sell-off on the Nifty that happened. So, if you're not subscribed, please subscribe and then share it to your friends. It means a lot to us. Thank you. So as usual, we'll be looking at the pre-market analysis for October 7th Thursday expiry, and we'll be looking at all of the candles, bank loans, price action, Bollinger Band, all of these on the charts, and then we'll also be doing additional analysis in the open interest, volatility, foreign institutional participation, the opportunities, and we'll run some actions. So it's always entitled C, price action. Nifty gave away 1%, no, almost 99.99%, 1% of down. What happened today? Some state 200 points, and above, was clearly away, and it was bearish engulfing gap. It's very solid bearish candle. BANKNIFTY 0.5% gone. The wick, the water kind of hammer pattern is there, which is showing that the bearish pressure from the top, and it is resisting at the previous resistance zone. And Nifty also broke out of the resistance zone, but also soon before clearing the next resistance and then fall down. Intraday, if you see that, it's an M pattern, kind of shot up and then came down again, shot up and came down and then dropped completely. That's a kind of price action that happened. It was an M pattern crack down. So you can daily time frame, you can also see some kind of double tone formation M pattern on the daily time frame. The previous M pattern that I said is 15 minutes time frame. Right? I'm talking about the daily time frame. You can see some kind of double pattern and some kind of HMS head and shoulder kind of pattern can be seen. But head and shoulder is not effective much on the daily time frame. It is more effective on larger time frames in monthly or weekly. So not to worry much on that. But there is bearishness in the candle patterns, or if you see, right? If you ignore this last statement that I said. So the 20 moving average is still giving support. Below the band median is also it's still giving the support. But we talked about a lot of things. Let's see the charts. These are the charts here, right? So engulfing means the candle is completely engulfing the green. The red is engulfed. The bears have conquered, have eaten off, kind of. Let's say that. That's what has happened on the Nifty left side, right side, BANKNIFTY. You can see that. Look at the wick. They show the bears are killing, right? And this is very wide range. In the morning it moved up like anything and then gave up. Here also it moved up, trapped all the bulls and then gave up. Moved up, trapped all the bulls and then gave up. It moved up and conquered 38,100 something, near to that. And then it trapped. It's full trapped on both and engulfing on one and then inverted candle. All bearish candles, that's what you see. Now intraday price action, you see, this is what I said. It shot up, came down, shot up, came down, and then brought down completely. Shot up, came down, shot up, came down, and then brought down completely. That's what the impact we are saying. This is a 15-minute time frame left on Nifty and right on Nifty. Support resistance, if you see here, you can see that it tracked to clear the 7600 to 7800 times. 800 was closed clearly and then shot up to 7880, that level, and then it got the resistance and then came down. Right, and then took support at the 7600 and 650, that range, okay, stops. And so the first support would be that 7600 to 650, that is broken. Then 7350 to 450, that is broken. We have 7250 to 300, that is broken. We have from that to adjustment 70,000 to 17,150. Upside, we have the first resistance will be greater at 7950. This is all time high, and after that we have 18,000. After that we have 18,350. There's nothing much has changed, and just trying to cross the resistance that we already marked or taking the supports that we already marked. Right side BANKNIFTY, you can see that it went to 38,000 resistance point, got hit there and then came back. Right? It could not hold in the second support level of 37,700 and 37,800, so it fell down further from there and then went almost near to 37,400 kind of figures. Right? That is where it started this bounce, second bounce after the gap up bounce from the hammer on the hammer. So support below is 36,937%. 37,000 is support, 7,400 is another support, and then resistance support is 37,800 first, and then 38,100 then 38,350, which is all-time high, and then above that you have 38,800, which is the projection of Fibonacci, right? So this is the potential to the Fibonacci. Moment divergence, you can see that there was a clear reverse divergence and it started working, and it did not complete the target. The target would have completed only if it had gone another all-time high. So midway it gave up, and then now it has kind of taken support at the RSI 16-year high levels. So this is what it is. So that moment is it's not fully worked out, right? Now, Bank Nifty weekly, if you see down here, you still have the weekly divergence, reverse momentum divergence is there, which can still, it's still work in progress. But daily it is gone. Daily there is no divergence, but the moment you can see that this resisting at the 60, which is bearish, right? So Bank Nifty momentum is not great, but on the weekly time frame, it is still having a valid chance of a bounce. Nifty is done with the previous momentum divergence that is pushing it up, and then now we have to wait and see what happens in the coming days. Trend deviation. So interesting thing is the trend has not crossed over. The trend is intact. Left on the bullish zones in Bank Nifty, right on the Bank Nifty, bearish bullish zones still. So trend, nothing has happened in spite of this fall. Momentum is momentum is lost. That's all. Trend continues to be there, but the strength of the trend has been dipping since several weeks. That continues to be there in both the prices. Volatility. What happened in volatility? So we like other day we saw that now 13% of fall from the 19 levels happened, and it has fallen in the to 16 levels. And today shot up 6%. 6% of movement one day. So this is the kind of volatility that is happening nowadays in intraday. Now the VIX, right? So it's a final signal 17.3, 6% up from the previous day's close, right? So this is what. So intraday over 16.3 and 34.5 from IVP, getting better from sellers. Opponent's analysis, if you see, you can see that the Nifty, this is left and right is Bank Nifty. You can see the Nifty 70,500 tomorrow is expiring number, and 7,400. That is where the maximum put writing is. Resistance is what will happen 7900 and 70. Highest is at 18,000. So it's a short build of futures are showing. Portfolio ratio is also slightly bearish, kind of 0.59. And with 37,000, 36,500. So holding 37,000 may be the key tomorrow. That is where the support is. Resistance here 38,000, 38,000. So clearing 37,000 maybe a bit of task for tomorrow's expiry. It's a short build up very strong. Clearly as to yesterday it was long build up both. The portfolio ratio is 0.69 is also not at all bullish. So the bearishness overall in the open to just the charts are same. Sectoral performance, none of the sectors performed. It is IT. Gave up 1%. It had already corrected 7.4%. It was consolidating. Now today it went down. It has lost the momentum has lost already, but we have to wait for the momentum to catch up again because the dollar is still strong. So stay is still there. Metal was going up, it gave up 3% today. 3% momentum is resisting. It is not even in bullish, but it is resisting, hitting at the resistance on resistance. So stay away from it, still momentum catches. Auto gave up 1%, it is also moving up reversal. And it is at a support level, you can say. That is still bullish, momentum is still bullish, although it gave 1%, but there is also a reverse level, it also can move, it can bounce from there, it can happen, but still there is a double bottom resistance that is there at the upside that has to be cleared before we pick up stops and trade on that. So it is in the wait list, you can say, auto, right? Metal stay away, IT stay away till momentum catches. Pharma gave up 2% and lost the momentum straight away. So it was forming. It was some kind of bullishness was seen there, that is also gone now. FMCG also 0.5 and slipped the momentum. Lost. First, we have to wait for the momentum to catch up. Right? Momentum is the key thing, price action. So, reality is the only stock that is, that also gave up 1.5% today, closed red. But remember that it was after 30% move in just 5 days that happened, and it's up and level breakout. And there is still forming multiple reverse levels moves, which shows that reality can again bounce. So, the only sector that is bullish is reality. Auto bullish but cautious. Otherwise, it was all sideways wait. Institutional participation, you can see that 800 crores is selling up. Yesterday again on 1915, crores, 800 crores. So 2 days of heavy selling. Okay? Not near to 3,000 crores of selling is happening. Today, DIS also, domestic institutions also sold. So institutional selling is a worry. Lower resistance, you can see, look at the chart, it's shooting up, the channel is broken and then it is hit to the resistance at 75 levels is where the rupee has weakened. So dollar has gone to 75.03, it's in that levels. That is the resistance. So it has come back into the channel, so most likely it may have some RB intervention or something and it cannot shoot up beyond that. So unless dollar further shoots up and takes away this resistance also. So right side you see is the dollar index, you can see that it has taken out a very long resistance and now heading towards clearing the next one. It did previously 3-4 days and then I will again short up. It shot back bounce, that's the reason why probably the currency pair also in the same. Now the another bad thing is that the crude oil is also shooting up and then it has gone to 78 kind of levels, and luckily there is some bearish candle formation that is happening today and it's a resistance orange. We hope it may come down, otherwise it's horrible for Indian economy. Consider the dollar value increasing, rupee depreciating and the crude oil shooting up every day, right? So now right side here you can see that the Vauld chart. We just try to hang on to the support zone, but because the dollar is strengthening, it is unable to do that probably, but it is not ready to slip for any reason. Good. This market is showing slight bearishness and flatness. UK, Europe markets also some bearishness is there, global bearishness is there. You know, reconfirm that pre-market tomorrow. Action holes left side, the Demat Account is a good one. It is breaking out today and then great momentum, with great strength, trends, all time frames ultimate and channel trending and channel breakout is what is happening. So Demat Account, so stocks to go with. IRTC, Indian Railway Corporation Limited is also has been shooting up like anything. But be cautious when you enter into this. Both of these stocks because it is breaking out like anything, right? So this need to be taken as a swing and the entry has to be only based on a retracement level, not at this point. If you enter at this point, you may be buying it at the top and then it may make a long-term investor kind of thing instead of a swing trade. So wait for retracement, but this is breaking out and there is, even when the market is fallen down this much, if this is breaking out, there is much steam left in that. But wait for retracement to make the entry. Now this is another chart that I have just, so there are a lot of corrections that has happened in the market if you see, but not, it has happened in chunks and you can see that there are 3 corrections happening in August, September, 3 months around, October just started. So each of the corrections is 2% each. So the last correction that you had was 2%. Before that you had May, June, July, 3% of correction that happened 3 times. Then January, February, you have a larger 7% each correction correction 3 times. So a lot of corrections are happening, but it's happening in small chunks, not as a big. Right? So market is moving up after substantial corrections happening at periodic intervals. Just to demonstrate that, I just thought of showing this. So now to wrap up, my view for short term, mild bearish, mild to moderate, I would say. There is bearishness all around. Why? FI is selling mode again. US market and UK markets, even markets all bearishness is hovering around there. RBI policy is there Friday, so some hit runs before that can happen. This is for short-term view, I'm saying. Right? Oil surge is happening and dollar is getting high. So all reasons. Market says room for more corrections also. The VIX is shooting up. So all the reasons why I am having a bearish view. But the trend continues to be bullish in auto. After all the 4, the trend need to get RDX, I'm saying. So that is the reason why it is only mild. Every dip is getting bottom support. That is the reason why it is only mild. Market is still at a very good support size, multiple support size there. It is taking support and halting exactly there and bouncing. All this is happening. So the trend and momentum steam is little lost, that's all, right? So that is our overview, and the rest of things, it is common for most of these days, like volatility is, I was telling that there is a range formation that is happening between 20 and 15 probably. That's why it is coming to 16, settling and then again spiking back. So that may be the new range that is getting popped. But look at the choppiness that happens. M pattern has been multiple V's are happening, right? So the market goes up and hits a stop loss, goes down, hits a stop loss. So this is very tough to day trade. Option selling or But option selling, the premiums are there, so alright. If you know how to use the calendar spreads, social spreads, and applying all these option strategies, or then there may be a scope for managing the trades back. Right. So hope this gives you a clarity on what happened in the market today and all these days, previous days, and then you can look forward to make your own plan. If it helps you, if you think you like it, consider hitting the like button and also share it to your friends that they also benefit. It means a lot to us. Thank you so much for watching. Happy trading, happy learning. Bye.